that we do in rural transit that's fairly common is we have complex relationships. Monies flow from one entity to another, and then for various reasons, we pass the money through to another entity, and eventually service gets delivered. But we do have some responsibilities when we are either the pass-through entity or we are the recipient of pass-through monies. And so whenever a state dock passes funds through to a lower tier entity, it imparts some obligations on the part of the state to oversee you. If you in turn give money in a pass-through relationship, not a contract that's competitively bid, but you pass money through to another agency. And the typical examples that I use are in Ohio and Indiana, where the state cannot give money, state DOT cannot enter into an agreement with a nonprofit. And in Indiana, it's mostly senior centers, senior organizations that run countywide rural public transit programs. And so in order to make rural transit happen in Indiana, because the counties have no interest in getting into the rural transit business, they're not going to set up shop and do it. The only way transit's going to happen is if the money finds its way to the senior center. So what Indiana has done is they give money, it's the primary recipient, Indiana DOT, gives money to the county, who is the subrecipient. The county, in turn, gives money to the senior center, which is a lower tier subrecipient. And in some cases, that lower tier subrecipient may go hire a TPO to actually operate some or all of the service. They are a contractor. They will recruit those services via competitive process. So we have a primary recipient, a subrecipient, a lower tier subrecipient, and a contractor, all in one little county to provide rural public transit. In cases where we have pass-throughs, organizational relationships that are established not via competitive process, but just by giving the money because we're legally allowed to do so, the state is allowed to give you, the subrecipients, money. Anytime we have those types of arrangements, we refer to them as pass-throughs. When we pass through money, we have obligations of examining and overseeing what the lower tier entity is doing. We cannot shirk that responsibility. Some of it, in terms of our scope of responsibilities, is simply paperwork that we would typically handle at the contract stage. We are obligated to obtain, if we're the entity giving money away, we need to make sure that the person, the entity we're giving money to, has a DUNS number. We have to know the federal award identification number, which we would get from GDOT, and that's the FAME number. We would have to know the federal award date. Again, we would get that from GDOT. And some of the things that we have a responsibility to oversee on an ongoing basis is making sure that our lower tier entities know how much total federal funds are obligated by our contractual relationship, any limitations of that federal award, anything related to the FATA Act, which is transparency. They have to give us the name of their CEO and things of that nature. We need to establish contact information. We need to give them the CFDA number, because if they are subject to single audit requirements, they need to report this revenue on their CFA. And if they are using the de minimis rate, they're obligated to tell us that that's what they're doing. have an obligation to tell them all of the compliance elements that they'll be subject to in the execution of the award. Generally, the way we do that is that we take the contract that we get from GDOT, all the terms and conditions, we make a copy of it, we draw up our 5 or 8 page contract with the lower tier entity, and then we include a paragraph that says all the terms and conditions of the prime contract between GDOT and us will apply to you. See attachment D for a copy of that contract. And we just attach that contract in the lower tier agreement. Sometimes people don't want to kill as many trees, and they'll do something like, all the terms and conditions of our contract with GDOT are hereby incorporated by reference. Legalese term that tells the lower tier entity there are additional requirements, but you fail to tell because you haven't included a copy of the agreement in that lower tier contract what those obligations are. FTA says you can't do that. If you expect an entity to adhere to various terms and conditions of the grant, it is your obligation to tell them what those terms and conditions are so that they can properly evaluate and determine whether or not the agreement between you and them is going to be able to be fulfilled while they meet all of those strings, red tape that are attached to the grant agreement. They have to make that decision, and you have an obligation to ensure that they know what all those obligations are. You need to find out whether or not they have an approved indirect cost rate from the federal government. Just as you need to know whether or not they plan to use the de minimis rate, you need to find out whether they have an approved indirect cost rate, because you, as the pass-through entity, have to agree to abide by that approved indirect cost rate. So you should know that up front. Here's one of the more problematic things about monitoring lower tier performance, lower tier entity performance, is that periodically you got to get away from your office and go visit them. Need to go conduct a site visit, discuss performance of the contract, review financial statements, look at how they're doing with respect to compliance with everything you expected them to do in accordance with the contract. It's time consuming. We don't have time to do it, but nevertheless, we have to make the time to ensure that they're adhering to the terms and conditions of the contract. You will be held partially accountable for their actions. And so it would behoove you to get out from your desk at least once or twice a year and conduct a site visit, a compliance oversight visit to those lower tier entities. And I would review their monthly financial statements and other program-related reports that they've been sending to you, and I would use these oversight visits as an opportunity to identify and detect issues in service delivery. This way you can catch issues before GDOT finds them when they come in and do compliance audits. It shows that you've been proactive. Also, if their auditors give them a hard time and perhaps are in error in interpreting the agreement and their responsibilities under the agreement they have with you, you have the responsibility of evaluating the auditor's finding and determining whether or not it has merit or not. And you, rather than GDOT, can issue a management letter saying the audit finding is inconsistent with the contractual agreement, the audit finding is not correct, and we believe that the grantee is in compliance, and we are closing the finding on your behalf. you can do that. That's rare, but it can happen. Some optional things that you can do, this periodically happens. We had a meeting just yesterday on when we think that there are additional issues arising in the performance of a contract. We as the primary vendor can request an auditor to go visit and conduct something less in scope than an audit. And the audit community refers to these as AUP procedures, agreed upon procedures, which is limited in scope, but will have the effect of having somebody qualified as an auditor to go in there and review specific subjects that you think are amiss. You can perform lower site reviews, or as GDOT has done, you can use hired guns in the consulting community, such as RLS, to go in there and do such reviews. Many states use that particular option. They do 2-day on-site reviews using consultants to monitor compliance. So the purpose of that section is to let you know that even though you may have limited responsibilities and you're just passing the money through, you're a conduit to get money to the actual entity that operates buses. In a grants management scenario, it doesn't relieve you of some oversight responsibility. It exists, and in some cases, state agencies will let you take a flat rate off the top of the monies that they're giving to you to account for your administrative oversight activities. In Oregon, when a county passes through money to a nonprofit, the county can take a flat $2,000 each year for every sub-agreement they have to account for the level of monitoring and oversight that the county has to perform during the course of the grant period. That I consider to be a best practice. I know at some point in time, counties agree to participate only under the assumption that we not task them with any financial responsibility or any managerial responsibility. We'll give you this money and all you have to do is sign it away to a lower tier entity and you're off the hook. And what I'm here to say is that might work to get the county to agree, but it's not accurate. The county is not off the hook. They do have oversight responsibilities anytime they pass money through to a lower tier entity. So any questions about that? All right, we're in the home stretch. And the good news is we're going to be done before 12 o'clock. Isn't it terrible when the speaker, purposely tries to brown nose the audience to get better ratings on the session review cards? It's a terrible habit. I'm guilty as charged. We didn't go over this yesterday. Normally I would have handled this in yesterday's agenda, but I thought it was more cohesive maybe to just put this at the end. There are other elements of the super circular in subpart D that really go beyond financial management that we've been focused on these 2 days that relate to your administration of the grant. I mentioned that OMB had 3 responsibilities. We've talked about cost allowability. We've talked about audit. We really haven't talked about program management requirements. So in the time that remains, we've got about 55 minutes. I just want to touch base to let you know that there are elements out there that are in the super circular that every federal agency, including FTA, must adhere to. And I want to review some of those things. And the list looks a little long here. There are a lot of bullets on that slide. But the super circular addresses standards for financial management, property standards, You must maintain equipment that you buy with federal funds in good working order. Procurement standards, perhaps the most complex of any of these bullet points. Performance and financial monitoring and reporting. GDOT doesn't collect all that data just because they want to. Because Michelle has nothing better to do but to read those reports. Generally, FTA requires the state to collect those reports, and in some cases, LMB requires FTA to collect those reports. So we have NTD reports, we have financial requests for payment reports, we have charter service delivery reports, we have DBE expenditure reports, we have civil rights complaint reports, we have ADA complaint reports. We have any number of reporting requirements that are subject to supercircular oversight. The subrecipient monitoring and management is the section we just covered. There are standard requirements for record retention you must adhere to. Generally, you guys never throw out anything. I've been to some of your offices. You don't throw out anything. And that may not be a bad practice. But at a minimum, you must meet a 3-year record retention requirement that we'll talk about briefly. Remedies for non-compliance. Not everyone's a great actor. Sometimes we do bad things and we have to pay for it. And then there are post-closeout adjustments and collection of amounts due. We won't really spend a lot of time on those last 3 items. So let me just jump into this section and delve into the financial management systems. Here's what the feds expect of you. Anybody who handles money must meet these requirements. And you've seen this bullet before when I talked about rigor of your accounting software and your chart of accounts. This is from which it was derived, the financial management system requirements. Every one of you. Assure GDOT when you apply for a grant that you've got the requisite financial capacity by either the human resource skill set or the accounting software and computing environment to identify all your federal awards, segregate operating from capital expenses, segregate 5310 from 5311 and all other federal grants that you've received, and that your reporting system can generate reports at any point in time so that we can obtain real-time information where you stand with respect to awards, obligations, and expenditures under any particular grant award. That's what the accounting system must be capable of doing. And if you think your accounting system doesn't pass the test, I would highly recommend that you jump into the marketplace and look for new accounting software. We depend on the accounting software to do an awful lot. And it's a pain in the you-know-where to change accounting software systems. There's a learning curve. There's a lot of data entry. It's a royal pain to go through a transition. But ultimately, it may benefit the organization to get more robust accounting software if you're going to be in the federal grants game for any period of time. We expect you to be able to tell us upon any request given to you at any time where you stand with respect to obligations that you've expended under a particular grant award. If you cannot do that, we have a serious problem with the financial management systems of your organizations. You've got to be able to do that. You've got to basically be able to tie each expenditure to some particular performance activity. Yes, we spent fuel in the delivery of rural public transit services. We expended management resources in the oversight and management of a rural public transit program. Those timesheets we've been talking about. we've got to know, we've got to ensure, we've got to have records that document we know where all our assets are. We have to have adequate internal controls, which I pulled out and dealt with in a separate section. So we don't need to revisit those. We have to be able to demonstrate within each grant contract that we have the requisite local match to meet federal requirements. Now, in any one billing cycle, particularly those of us who are dependent upon contract revenues to meet all of the local match, and some of you in this room are in that boat. The aging process of the accounts receivable systems that are employed may result in any given month, we may get zero revenues if we're on the cash basis of accounting. If we're in the accrual basis of accounting, we may have outstanding balances that will meet that local matching share, but on any given month, depending on when the checks actually arrive, we may show no revenue, i.e. no match to the grant. FTA is concerned about the overall grant amount. At the beginning of the year, we want to be very sure that you have sufficient local match for the grant. That's why we go to great lengths and ask you to identify in great specificity what the source, what the amounts, and what the availability of those grant revenues are, those matching revenues. During the fiscal year, there will be ebbs and flows, and we might get a little bit behind the curve in having those match monies readily available. But by June 30th, the close of the year, we must ensure that we've got sufficient local match to meet the matching share. And then we go to remedy that, or to close that out, document that in the grant closeout activities. It's our job during the course of the year, certainly if we're dependent on contract revenues, that if we see that our contract revenues are falling below the requisite match levels, it's going to dictate a management action on your part. If you project that trend to continue, you are going to have to make a management decision to do one or some combination of either increasing revenues from other sources mid-year, reducing services in order to get overall expenditures within the available match amount, or three, you're going to have to get out your checkbook and pay GDOT back some money because you've overdrawn your federal grant award. So it is critical that you monitor your cash flow in these contract revenues. When I was a program manager, I had a requirement that every system have a 5-year, and Ohio does this still to this day, California does this, have a 5-year projection. When you are relying on non-dedicated revenue as your local match, maybe for the past 5 years, we've relied on Title IIIB of the Older Americans Act. The senior center's been a consistent, reliable vendor. They purchase service for my transit system. What I required is that they provided 5 years history of the stability of that Title IIIB contract revenue source. And I made them submit that as part of their grant application. That way it allowed me or my staff to evaluate when they put up Title III purchase of service revenues as match based on the 5-year history. I could judge whether or not that applicant had a good grasp on what the revenue streams would be in the fiscal year in which they were applying for 5311 funds. You just can't assume that you're going to get contract revenues where revenues don't exist. So you've got to be very accurate, and you've got to monitor that, because if those revenues come in under budget expectations, you are not off the hook for the match. You've got to provide 50% of the operating match. And so that means ongoing monitor, and I'd watch this like a hawk, month in, month out. And if I saw I was behind the curve, and it wasn't because there were administrative glitches in Atlanta, and that money would eventually come to me. If it was something other than that, I'd start taking corrective action. And usually, unfortunately, about the only corrective action we have available to us is reduction of service. And so we need to be prepared to spin on a dime, as it were, when we see these trends emerging, contract revenues falling below expectations. We better be prepared to adjust service levels so that we can reduce expenses, therefore reduce the federal drawdown, reduce our local matching share requirement so that our contract revenues do meet 50% of the match requirement. We've covered a couple of those things in matching. We've talked about in-kind could be a substitute, but here's the performance area that I just sort of spoke on. You really have to monitor the budget. The transit manager has to wear a lot of hats, and a lot of times we're good at getting our hands dirty, changing tires, substitute driving, resolving passenger complaints. Our transit managers have to wear a lot of hats, and unfortunately, having some financial skill is part of the job description. And this ability to make these periodic comparisons of budget versus actual is critical. And understanding how the performance, how our ridership data, how our revenue hours and revenue miles are tracking against budget and projection, how they all interrelate is part of the critical skill that we need to do.
Rich, are there any tools that would help us substitute them?
Wow. Most of the software companies will tell you that their scheduling and dispatching software has a series of reports that can be provided that will help you assess operation. Oftentimes those reports, however, are not well integrated with financial data, and you have to manually merge the two. I know of no software platform that is designed to give you sort of a management 101 overview of rural transit. It doesn't exist. So off the top of my head, no. You just have to do things like go to conferences such as this and kind of learn those skills one bit at a time. Spend 40, 50 years in the business and you might learn something over time. Protecting federally funded assets. Worst day I ever had in the transportation industry was I was responsible for management of the 5310 program. And I had a sheltered workshop director in Greenville, North Carolina, was one of our big 5310 subrecipients. He was going through a little cash flow issue at the time that I was unaware of, and he failed to obtain collision insurance on one of his 5310 vehicles. And sure enough, that vehicle was involved in a collision and was a total loss. He had the good sense to call and report the casualty loss. And I said, no problem, this can happen, is everybody okay? And we went through that, and then I said, let me know when your insurance company adjuster lets you know what the settlement will be. You'll send that check to me and we'll apply it towards a future grant so we can replace that vehicle. And there's sort of silence on the other end of the phone, and then he hung up. About 2 hours later, I was called down to the Secretary of Transportation's office, who had just gotten off the phone with the governor. And I was about to be fired. And the reason I was being fired is because I had the audacity to request from this poor nonprofit agency that did nothing but serve the disabled community in Eastern North Carolina, day in, day out, faithfully, and that I had the audacity to request $17,000 of this individual because that was the federal interest in the current fair market value of the vehicle that he wrecked. And the secretary is a good guy. He chewed my ass out for 30 minutes because the governor had just chewed his butt. Little did I know this executive director had made substantial political contributions to the governor, and the governor lived about 10 miles from this Sheldon workshop, so they were buddies. And I'll tell you, that was the worst day of my life. You have to protect the federal financial interest in any asset you have, because in the event that that asset goes missing, the extent that that asset is destroyed via casualty loss, you owe the federal government whatever the rate of federal participation was in the initial acquisition times the current fair market value, FMV. You got to give that money to GDOT. And either you guys need to be prepared to write a check for that amount, or you need to have commercial insurance to cover that. Most states will stipulate that you have to have a minimum level of liability to operate a motor vehicle in the state. They won't necessarily require you to maintain collision insurance, which is essentially what we're talking about. And this Sheldon workshop director, to save a buck, cashed out his insurance and left collision off the table. He ended up writing me a check. I eventually won. And I don't think Tom Bradshaw, the Secretary of Transportation, he didn't bring me to a meeting, didn't call on me to do public events for a year after that. I was in the doghouse so far. It took me that long to get out. So you've got to provide for the protection of that asset. I was walking through a transit program last week. They didn't have maintenance software. They had a wall where they had all these whiteboards. They had every vehicle, the fleet up there, and they had the current mileage. And that's how they tracked their maintenance, to ensure that they were conducting OEM recommendations to do oil changes and the like every periodic point, whether it's 7,500 miles, 15,000 miles, 22.5, etc. One of those vehicles, I couldn't help but notice, stopped me in my tracks. Instead of the mileage increment, it had stolen on it. Someone stole a transit vehicle. I turned around, looked at Arizona DOT, and I said, these guys owe you some money. And they were on top of it, and the tribe had insurance, and the insurance settlement on the stolen vehicle had to go to Arizona DOT. That's the proper disposition procedures that are articulated in the common rule, which is now essentially articulated in 2 CFR Part 200. You've got to protect that federal asset, whether it's an accident, a casualty loss, theft, or even natural disaster. Some of you may have heard, we've had a couple hurricanes in North Carolina. Hurricane Florence came through just about 8-9 weeks ago, September 11th, and kind of flooded out an awful lot of properties, including my house. This affects transit as well. A couple transit offices get flooded, Hurricane Matthew, Hurricane Florence, and if they have federally acquired equipment in that office, they've got to make sure that that equipment is insured so it can be replaced. That is your obligation, to protect the federal interest in that property. If we have real property that was acquired in whole or in part with federal funds, we have policies on who holds title. Generally, the rule of thumb for FTA grants dealing with real property, and real property, we're talking about land and buildings only, title must be held by the recipient. The use of that property, FTA says that property must be used for the purposes in which the grant specified in the original application throughout its useful life. If for any reason during the useful life of that property you no longer need the property, you are obligated to immediately notify GDOT And GDOT must immediately notify FTA that property is no longer needed for transit services. And then we have to begin appropriate disposition procedures. Under normal circumstances, we dispose of equipment that has exceeded its useful life. And under FTA rules, when we dispose of vehicles that are beyond its useful life, there is no longer any federal interest in the proceeds of that disposition. We get to keep it if the disposition proceeds are less than $5,000. And they usually are, because we run the vehicles into the dirt, and we typically only get $1,500 to $3,500 for the equipment when we dispose of it. But we get to keep that money, and we have to keep it in the transit account. We can't divert that to go fund the police department or the fire department. It stays with transit. As disposition proceeds, and as that previous slide said, not what your speaker said, but what the slide said, disposition, sales proceeds from dispositions are not considered program income. You get to keep it, and you get to use it for transit. There is real property, land and buildings, and then there's what we used to refer to as non-expendable personal property, which is typically rolling stock, supplies that have a unit value over $5,000, and other intangible property. Again, title rests with the recipient. Yes, the state DOT may take a lien on that vehicle, not because you have a fiduciary responsibility to GDOT, you owe the money, you don't. It's so that GDOT can control the disposition process so that you don't dispose of vehicles ahead of its useful life and not compensate the federal government for its pro rata share. That's primarily why that trick is used. And similarly, we have use and disposition procedures for non-expendable personal property, and we have something new in the super circular. Illinois once asked me to do a PowerPoint presentation on what procedures had to be in writing at the local level. And this is one of them. The super circular says you should dispose of property using a procedure that provides for maximum compensation back to you and requires those procedures to be in writing. So everyone should have written disposition procedures. Doesn't necessarily have to be long or complex. Could say something, nothing more complicated than we will dispose of all equipment that has exceeded its useful life by advertising on auctions.gov. Some of you don't like the auction fees that you have to pay, don't like to use an auction process. You just as soon put it out in the local paper and solicit quotes from prospective buyers, and you'll take the max quote that's provided during a given period of time. Some of you just sell it for salvage value. Your procedure should outline a disposition process that returns maximum dollars for you and should be in writing. So that if you get run over by a bus today, your predecessors will know what procedures to follow when it's time to dispose of project equipment. All right, there's two key things, and I'm oversimplifying this to great lengths with respect to procurement that the super circular imposes on you. Written standards of conduct and technical capacity. We could spend 12 hours just on procurement technical capacity. We'll save that workshop for another day. But let me just focus on a couple things. Both the super circular and a lot of things in the super circular, FTA already had in writing in FTA Circular 4220.1F. That is a circular that outlines all of FTA's requirements for using FTA funds to purchase goods and services. You gotta know that. If you're out there buying stuff, you gotta follow 4220. Just as I said, the finance officer has to be aware and knowledgeable about the super circular, your purchasing officer has to be knowledgeable of and aware of 4221F, or you're going to get in trouble. There are two main things here. First of which, we want you to conduct procurement using taxpayer monies in an ethical and prescribed manner. It dictates that you have, in writing, written standards of conduct. The standards of conduct have to address three critical areas. Number one, it's got to apply to the right group of people. Most of you have a standard of conduct policy or an ethics policy that applies to your employees. But in procurement, the audience that the policy applies to is a little bit larger. It's got to apply to our officers, our board members, our commissioners, our councilmen, our employees, our agents. We might hire somebody to help us acquire scheduling and dispatching software. Your ethical standards would apply to that hired gun. Your immediate family members, the ethics policy applies to. And so oftentimes the fault is not that you don't have an ethics or standards of conduct policy, you do, but it only covers employees. And then I have to write you up for a compliance violation because your policy doesn't have the right coverage. Number two, the policy has to explain what constitutes a conflict of interest. If the salesman for that Q software product happens to be, my brother-in-law, that represents a potential conflict of interest if I'm the buyer for a local transit agency here in Georgia. And that policy should explain what my obligations are for disclosing those conflicts of interest before I get to participate in any way, shape, or form in the purchase. Federal rules require that I deal with gifts. Most of us in the room probably have those real nice blue Route Match coffee mugs. I love mine. But RLS had to determine whether or not my acceptance of that gift from Todd Allen compromised my ability to provide objective advice to you as to whether you should buy Trapeze, Route Match, Echo Lane, Easy Rides, or whatever the product may be. Q-Ride, yeah. They're here. I talked to them last night. I take personal responsibility for their success. We've helped them out a little bit. Yeah, and usually the way most agencies handle this is that gifts of nominal value are okay. In all reality, as nice as the Route Match mug is, it doesn't influence my decision to say the technical support from Route Match sucks, or whether or not it's great. The mug doesn't have any influence on me. But now if Route Match offered to take me to Jamaica for a weekend, maybe that activity would influence my decision. I can be bought, I'll admit it.
That's good to know.
So the policy should say, and what a best policy would do is say, gifts of a nominal value defined herein as less than $50 are acceptable but must be reported to management, or may be accepted without further obligation by the employee. Any gifts above $50 should be rejected by the employee or immediately be reported to management, something to that effect. Then finally, what happens if I violate our ethical standards policy? Do I get a slap on the wrist? Do we cancel the contract with the vendor who I had an apparent relationship with but no one knew about it, and we awarded the contract to them not knowing about that personal relationship? Do I penalize the vendor? What happens? Because of the range of circumstances from minor to major, I often advise against very detailed or prescriptive disciplinary procedures for violations of the policy. But I escalate the issue immediately to to the highest level, my governing board, for resolution. So I recommend language, something to the effect of, if a violation of this policy occurs, the party alleged to have committed the violation may be subject to disciplinary action up to and including termination based upon a decision made by an insert governing board name here. That gives the governing board fairly wide latitude to determine the magnitude and impact of my violation on the procurement process. And obviously, you would want to weigh in with legal counsel on these types of issues as well. I should note that this has always been a requirement under FTA guidelines. It's the first paragraph in Chapter 3 of FTA Circular 4220. Some of the procurement regulations in the next few slides are not in other grant-related materials. And as a consequence, OMB has granted an extension on the implementation of some sections of the super circular. But because you are a 5311 grantee, FTA 4220 has been out since 2008, you have no such extension. This has always been our rules. FTA has been ahead of the curve in developing procurement guidance, and OMB has caught up with FTA in this regard. So if you work for a local government, you go back and you said, I heard a little procurement stuff in my super circular training, and someone says to you, well, don't worry about that. We got an extension. It's not going to be effective until next year. Don't believe it, because in FTA, your contracts already require compliance with this circular. Award to responsible vendors. What makes a vendor responsible? They do their chores at night? I mean, how do we evaluate this? What in the world does OMB mean by award only responsible vendors? Does anybody know? Their track record. Believe it or not, that's part of the correct answer.
Can't be suspended or disbarred.
Suspended or disbarred, and how would we know about that?
Check SAM.gov.
SAM.gov. Does anybody know what SAM.gov is? It's evolved over the years. In my day, we had the Attorney General's lists of debarred contractors, which no one ever knew who was on it, because no one ever knew how to find the Attorney General's list of debarred contractors. That evolved into a list, and some lawyer thought up the name Excluded Parties Listing System. And that was in effect for a while. And then that list was merged with other government procurement oversight, web-based applications, and then amalgamated under the brand System for Award Management, or SAM.gov. And you have to register to use SAM. Every one of you should be registered. If you use federal funds to buy stuff over the micro-purchase threshold, you should check SAM.gov to make sure, to use my terminology from yesterday, that you're not doing business with bad guys. You don't want to do business with contractors who have been debarred from participation in the benefits of federal contracts. You need to register to use that service. You have to come up with a username and a password, and then you go to the search function and you type in the name of the company, and it could take you several tries. One of the annoying things about SAM.gov is that you got to have the exact name. Computers are dumb. You got to have the exact name as listed in SAM. And if you don't, you could actually miss something. So you type in the name as you believe the legal name of the organization is. And oftentimes the contractor's not debarred, and SAM will spit back a blank screen that says no search results. FTA being a picked-upon small federal organization, doesn't trust you to look up or to tell them that you use SAM.gov. They don't believe you. You have to verify that you used SAM.gov. So my advice to you is when you go on and do an online search, you print out the null search results and you put it in the procurement file so that you can verify to FTA that you actually did, in fact, back in April when you bought the widgets, looked up Acme Widget Company and verified that they were not the BARD. There are other aspects about responsibility in federal transit law that uniquely apply to us that deal with past performance of the vendor, vendor's proven ability to meet environmental and local laws, i.e. I get my license renewed in Georgia every year, so I'm able to do business here. I comply with environmental statutes. Perhaps if I'm a landscape contractor, I don't let mud flow into the drinkable water supply and things of that nature. I perform jobs consistent with local development standards. I don't have a history of being penalized by the zoning administrator of one county for failure to meet site requirements and the like. So that's pretty much vendor responsibility. The technical capacity is your ability to follow federal rules in buying stuff. The most important tool you have at your disposal is a template procurement policy that is predicated off of federal guidelines. Some of you who work for local governments, there may be a local purchasing policy that embraces anything about Georgia statutes that apply to your organization. They probably will not address federal standards, which are far more numerous. And so what I typically like to recommend, that in your local policies, you always have a clause that tasks department heads when using federal funds to acquire goods or services above the federal micro-purchase level are responsible for ensuring compliance with all applicable terms and conditions. And then have the transit agency literally have its own FTA procurement policy that, quite frankly, if you followed everything FTA said, that policy alone could cover 60 to 70 pages in length. It's that complicated. And FTA will say, don't blame us. It's Congress that develops things like bus testing requirements, and therefore you've got to have 5 pages in your procurement policy about not being able to buy any bus that hasn't been subjected to Altoona testing. And it's not our fault that we have a Buy America provision in highway and transit projects that require us to use 70% domestically produced steel, and that final assembly occurs within the United States. And that results in 2 or 3 pages in your procurement policy. Or that we have various civil rights laws that flow down to contractors who must abide by Title VI or EEO requirements when they are participating in contracts funded with federal transit dollars. And so FTA has a point when they say it's really not our fault, and then the rest of it is just general federal procurement guidance. And you've got to basically adhere to all of it, or you jeopardize. The problem with violations of the procurement policy is that you jeopardize federal participation in the purchase price. We had a regional council of governments go out to bid for a contractor in Illinois, and they didn't include required third-party terms and conditions that were applicable to the contract. And upon post-award evaluation by IDOT, they noticed that the contract between the commission and the provider lacked these required terms and conditions. And as a consequence, IDOT refused to participate in the contract. And they left the regional commission on the hook for $120K. Needless to say, that was not a happy circumstance for the local political leaders in that community. We eventually came to some resolution on that issue, but violations of procurement policy risk federal participation. The general rule of thumb is if you violate any of the FTA provisions, you jeopardize FTA participation. So you got to know this stuff. And this is tough stuff to know. If you're a rookie at procurement, don't tread out on your own. Get GDOT advice before undertaking any procurement on your own volition that is going to be in excess of $10,000, which is the current federal micro-purchase level. The other thing to be aware of is that the federal level, their requirements expand exponentially on the dollar value of the procurement. And we have 3 primary levels. Those levels have been a moving target. If you read the super circular, you're going to see that the 3 levels are micro-purchase, small purchase, and formal purchase. FTA has the same levels. In the written guidance of the super circular, the micro-purchase level will say $3,000. The small purchase threshold will say $150,000. Those targets have moved. The micro-purchase threshold changed to $3,500 in FY16, and it's changed again to $10,000 effective FY18. The small purchase threshold went from 100 to 150 with the issuance of the super circular, and went to $250K effective FY18.
Rich,
Yes.
we're gonna have to wrap this up because the luncheon is starting now.
Okay. Well,
I just realized that.
well then, by golly, that's all I wanted to say.
Sorry.
One last thought, though. Again, procurement's complicated. Sometimes mistakes are made. The super circular tasks you and you alone as being responsible for resolving bid protest and bid disputes and contract disputes that may arise between you and a vendor. GDOT doesn't want to get involved with your problems with vendors. You've got to have in-house procedures for resolution. And with that, I know it's been a long 12 hours, less 10 minutes. I hope it was informative. I hope it's information you can use. Enjoy the rest of the conference and have fun.
Great job. Learned a lot. Learned a lot.
Thank you very much.
Thank you, appreciate it.